You are listening to chartingwealth.com for Thursday, the 24th of March 2016. What do we see going on in the market? Well, we start with IYY as we always do on a daily basis. Don't forget the markets are closed on Friday. What do we see happening? Well, IYY, the total market, is down for the day 1.18%, still above the two-day trend line, still well above, although it does look like the MACD, the moving average convergence divergence indicator, is coming nearer and still a good bit away, but coming nearer the signal line. The derivative oscillators continuing to lose speed. But again, like I said, we're still above the two-day trend line. If we look at what happened on the 4-hour chart intraday, we see that we did cross over, as we said was happening yesterday, getting very close. It did cross over going down. And we have down candles in both the morning and the afternoon, still above the two-day trend line. Let's pay attention to what happens throughout the course of the day on Thursday. Now we go back to the two-day and we look at S&P 500, the Standard & Poor's 500, as shown to us by SPY. And what do we see? Well, we see that the movement, we still don't have a crossover on the big chart going down. We're up on the charts. We're still above the two-day trend line. If we look intraday, what do we see? Intraday, we see that there was a crossover, as we've already talked about, going all the way back to the afternoon of the 21st, still hovering just above the two-day trend line. We are down. Derivative oscillators rotated over. It's in the negative. We'll continue to watch and just see the way that the market goes. Now we're going to go back to the two-day chart. We're going to look at the Qs. What do we see there? The Qs has lost some too. Oh, by the way, S&P 500 down 0.65%, just over 0.5%. The Qs, which is the NASDAQ 100, down 0.83%, so not quite a percent down, still above the two-day trend line. If we look at the intraday chart, and again, our MACD is still positive on the two-day chart. Intraday, well above the two-day trend line. It did finally cross over this morning, going down movement in the morning and the afternoon. The market actually moved down lower than it ended up, and like I said, down 0.83%. Been going up nicely up until that point. Hopefully those of you who were into the Qs took some of that profit around the 22nd, but we shall see. Again, just because the small chart's going down, it does not mean that's going to roll the big chart over. And guess what? If it moves back up again, crosses back over going up, another reason to get back into the market, because that'll be the same direction that the big chart is currently going. Lastly, let's look at gold. Go back to our two-day chart. Call up gold. Now, gold has been in a decline, as we talked about, crossing over, going down on that two-day chart back on the 15th of March. It was down big time, 2.28% for the day, crossed the two-day trend line, that up two-day trend line, many days ago back on the 15th. Now, let's take a look at what gold did intraday and what it's showing us. Well, as we talked about, gold had already crossed over back on the afternoon, well, the morning of the 21st, and hopefully we talked about inverse gold being in an ETF that is an inverse of gold. So that means that ETF, that exchange traded fund, goes up when gold goes down. You would have done quite well today with that large drop in gold. It did make some upward movement in the afternoon. It was even lower to begin with. And like we said, gold down 2.28%. Confirmed down moves on gold on both the short chart and the large chart. These charts are working pretty well for us, aren't they? They are, when they cross over going in the direction, the short chart crosses over going in the direction of the large chart, safest time to look to get in to a move going in the direction of the big chart typically. Hopefully you've been practicing that. Again, we're not a stock calling service. We are an education firm. We want you to set up an online trading account virtually. You can do that, put virtual bucks in, see how well you can do. Once you get really good at it, you're comfortable in your skill set after many months, then and only then can you make your own decision as to whether or not you want to start trading real money. Because remember, first thing to do is not lose anything. Second thing to do, is to make money, and you make those decisions. We do not do it. We are not paid to do that. We don't claim the skill set to help you do that. We are simply an education firm. Thank you so much for listening. We appreciate it. Join us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. You can write to us from the website, chartingwealth.com. Sign up for our daily podcast. You will receive with that two great things: the freestockchart.com layout that we have. You'll get a link to that, plus how to read a stock chart. The video take you about 15 minutes, give you some great schooling in that, because remember, it's all about the charts. It's not about the media noise. Pay attention to the charts. They'll tell you what's really going on when the media may just confuse you. Thank you from chartingwealth.com.